Hello, everyone. Good afternoon. Well, it's been a while since my last video, and honestly, I've been doing a lot of quiet studying of the markets in the background while also being with my daughters at the just concluded National Youth Games Festival, where one of them actually brought home a silver medal in the chess event for our state. And sometimes stepping back like that gives you that eagle eye view you just don't get when you are stuck inside the noise doing the day to day trading activities. And what I have come to notice across the GBPUSD, USDJPY, and of course the gold commodity in recent times is something I think a lot of traders are overlooking. And that's exactly what I'll be keeping a close eye on this coming week. I know a lot of people must have lost money trying to catch a rally during this time, only for price to snap back to their entry or worst case scenario run into stop loss. Yeah, of course, I know that frustration thinking you caught the move, then price reverses. That's the market telling us it's not ready yet. So, in this video, I'm taking a broader look at the GBPUSD, USDJPY, and the gold commodity all in one video. So, across all those three markets, it is evident that price has been stuck in a range bound structure in the last 2 months thereabout. Except for gold, others has not been trending, just bouncing back and forth, an indecisive character going into the coming week. And when you see multiple markets doing the same thing, it's not a random thing. It's the market quietly waiting for a trigger. And it appears that trigger might be coming soon. And when it finally happens, there is a high tendency it is going to be explosive. And what we want to be doing here is to ensure that we strategically position ourselves in such a way that we can capture that move when it finally happens. And in the coming week, looking at the economic calendar, it appears things could change completely because we have back to back high impact economic events lined up across the economic calendar of all of these countries. We are talking about the Fed interest rate decision coming up on Wednesday. We have the FOMC press conference where the Fed chairman is going to be speaking. We also have the UK CPI data. When is that one coming? That one's coming on Wednesday. We also have some labor oriented data from the United Kingdom coming in on Tuesday as well. That is the claimant count change, employment change, higher low unemployment rate, and of course, the Japanese economic docket is not left out of the picture. See, on Friday here, we have the Bank of Japan interest rate decision. They are also going to be having the Bank of Japan press conference as well. Then the UK is having their retail sales data on Friday. The United States is also having its retail data on Tuesday. So you can see, in other words, this is a perfect storm of catalyst the market has been waiting for. Now, let's go into the chart and let's see things from a technical standpoint. And what is it that the market is doing at the moment? How is the market thinking? And of course, our technical analysis will give us an insight into what is really going on. Now, the first one I will be looking at is the GBP USD, and this is the 4 hours time frame. What you see here is the character of price action since the beginning of the year, and it is quite obvious that the pound sterling has been gaining traction all year long, finding higher highs and higher lows along the way. And from a technical standpoint, after connecting the series of higher lows, we have this beautiful ascending trend line that has been supporting this bullish momentum. Now, this is not where my attention is. Let's zoom right into what has been going on in the last 4 to 5 weeks. Though we have a trend line, as you can see, and during the course of last week's trading session, we saw how price broke out of that structure, broke it out, retested it multiple times, and the breakout retest of this structure evolved into a situation where price appeared to be moving sideways, that is confined within the 1.35800 level and the 1.35150 to emphasize the prevailing uncertainty going into the new week, which is laced with high impact events to look out for. And within this range bound, you will see that each time price pushes up, sellers come in at the 1.358 to bring price back down, and each time it dips into the 1.35150, buyers step in, pushing price up. An absolute deadlock, if you would ask me. And why is this so? Well, UK inflation still remains sticky at the moment, and the Bank of England remained cautious as regards to interest rate decision at this point. And of course, on the other side of the pond, US is sending mixed signals on rate cuts. So that clash there keeps the GBPUSD confused, and the likely scenario is going into next week, if US inflation comes in higher than expected, we could see the dollar rally, and that could see the pound sterling drop significantly to the downside from there. But if UK inflation stays high and the Bank of England hints at a hawkish outlook, we may see price break out of the 1.358 and then continue to rise to the upside. So we are definitely going to be keeping an eye on how the market anticipates and reacts to the UK CPI, labor data, Bank of England minute, and of course the Fed interest rate decision. So this is basically the structure I'm looking at to guide my decisions on the GBP USD. Now, moving on to the next asset, which is the USDJPY. So what I did here on this chart was to take into account the character of price action since March. That's about April, May, June, July, August. That's about 6 months of historical data. And of course, you can see the US dollar has been doing pretty well against the Japanese yen in the last 4 to 5 months. And looking at the chart here, the 4 hours time frame, we have an ascending channel. After connecting the series of higher highs, we have the resistance line here, and after connecting the series of higher lows, we have the support line of the ascending channel. And the fact that price still remains within the channel still gives the dollar some hope within this whole structure. Now, that is not where the bone of contention is. So what I'm looking at right now is, after zooming into the structure and taking into account the character of price action since July of this year, you can see price action is caught within the 149.00 level and the 146.500 area, giving a range bound structure and of course emphasizing the prevailing uncertainty in this market. So what this simply tells us is that price is capped around the 149.00 area. As you can see, every time buyers come in, sellers push price downside. Though we had a breakout here, but it didn't last long. Price dropped back below the structure. The same thing happened here in August, and then at the beginning of this month, we saw another selling pressure from that area. And of course, price is also supported around the 146.500, as we saw that in the last 2 months, sellers have been finding it difficult to break through this particular structure, giving us a robust support line going into the new week. Now, why have we had this whole indecision happen in this particular market? First of all, the Fed cut expectation pulled it down, right? And then we also saw how the Bank of Japan still keeping policy ultra loose, which keeps the yen weak at this particular point in time. The likely scenario that we are looking at going into the new week is if the Fed aims at interest rate cut, the yen is likely going to strengthen, and this means that this support line we find here may likely break down. Look at how beautifully it lines up with that ascending trend line where the breakdown retest could incite selling ideas. But if the Fed stays hawkish, that is, they maintain the current interest rate, and the Bank of Japan does nothing, we could see the USDJPY break out of both the trend line and the 149.00 area, leading to price action climbing to find new highs. So moving into the final asset we'll be monitoring for this week, and that is the gold commodity, popularly known as the XAUUSD. Now, what I'm looking at on the XAUUSD is more of a shorter period of time. That is, I'm looking at what has been going on since the mid of August, which makes that about 5 to 6 weeks of historical data. And of course, you will see that the price of gold had continued to rise since August, and as a result of this rise, we saw price testing an all-time record high last week around the 3,675 zone before it went into consolidation. Now, my bone of contention is not within that area, but let's zoom in and see what happened through last week's trading session. Now, during the course of last week, we saw price consolidating near record high, price confined within the 3,655 and the 3,625 level. And of course, you know what this simply means. Range bound structure equals indecision going on in the market. Market are obviously waiting for this high impactful event to decide whether they will continue to hold on to the gold commodity, or it is high time they start taking some profit off the chart. Now, you would ask, as the first thing, why is this so? Well, safe haven demand at the moment is currently high, keeping buyers locked in at the moment due to uncertainty in the market. However, the recent strength in the US dollar and of course the treasury, that is the US treasury bond yield, appears to be capping the upside at this point. As you can see, every time, but after the record high, we can see sellers begin to jump in as soon as price got into the 3,655 level. Now, the question going into next week is, will this resistant line hold in such a way that it pushes price down, or are we going to see price break out, retest the structure to find new highs? Now, the likely scenarios for me next week is going to be built around this particular structure. So if risk sentiment worsens or the Fed leans dovish, gold could break higher, that is break out the 3,655 level to welcome buying ideas. And if Fed delays interest rate cuts, the dollars is likely going to get strong, and this will make the gold commodity very expensive, and this could incite price breaking down that ascending trend line and the 3,625 level to incite selling opportunities from that particular area. So we are going to be keeping an eye on how the market anticipates and reacts to the US inflation data, the bond yields, geopolitical shocks, Fed interest rate decision, all which will be happening around this particular structure. So here is what most traders appear to be missing. These are not random, isolated, range-bound structure across these assets. They are all linked by one heartbeat. They are all waiting for the same signal, that is clarity from the Fed and global risk tone. So until that happens, this range-bound structure will continue to hold, but when clarity comes, price action will likely break across all these three assets almost in the same week. So this feels for me like the calm before the storm. And at this juncture, it is very important that I say this, that let's respect the ranges. You might want to trade the edges, maybe sell at the resistance line or buy at the support if you're a day trader, if you must, but don't get complacent at the same time. When the decision lands, I will be watching out for the first breakout confirmation. That's where the real opportunity lies for me. If this helps reset your perspective, I would really appreciate your support by clicking on the like button and drop a comment. Which pair are you watching most closely going into the week? It feels good to be back. I will be updating my views in the comment section as price action unfolds through the course of the week. So, I wish you a wonderful evening, everyone. Trade smart, trade consciously.